Hello everyone, thank you very much for joining us here today. Welcome to SE UK HQ for this webinar on the foundations for applying for finance and the common mistakes to avoid. With me here today are David Chick, the Head of Credit Underwriting at Unity Trust Bank, and Kevin Lloyd-Evans, the Head of Lending at the Big Issue Invest. Thank you both very much for being here today. I'll hand over to them very shortly, but first, just to let you know how this is going to work, we'll share some slides with you, go through a presentation and have a Q&A at the end. If you have any questions for David or Kevin at any point during the presentation, do put them in your Q&A box, at the bottom of your screens. Okay, I will get the slides up. And sorry, there we go. Can you all see my screen? Is my screen being, David?
Yes, thank you, Chris. Perfect. Yeah, very good.
Okay.
Good morning. Good morning, everybody. My name's David Chick, as Chris has said. I'm the Head of Credit Underwriting at Unity Trust Bank in Birmingham. The agenda on the next slide, Chris, if you could, for us. Very simple today. I'll give you a brief introduction on Unity Trust Bank and tell you a little bit about who we are and what we do. Then Kevin will do similarly with Big Issue Invest. We'll then talk about the foundations for looking at and applying for finance, and then go through some of the common mistakes and how Kevin and I think you might want to overcome those. And those aren't mistakes simply for small businesses. We see those in small and large, so it's not particular to any particular size of business or indeed sector. So to Unity Trust Bank, Chris, next slide. Unity is Birmingham based with satellite offices in Manchester and London. We are heavily focused on social impact, social, community and environmental impact. And we aim to be the bank of choice for socially minded businesses, and hence this presentation today, to be honest. That said, at the end of the day, we are a commercial bank, and as such, we have what we call a double bottom line strategy. That is impact and clearly profitability for our socially minded shareholders. Our lending, every pound of it has to deliver impact. And hence we do a lot in the, as you can see on the slide there, a lot in the social housing arena, a lot in the healthcare arena, and in the charities sector. And as a bank, we also ourselves practice what we preach, and we do adopt all the socially positive initiatives you can see at the bottom of the slide there. We are very much understanding ourselves the impact we have on society and our local communities. Chris, thank you. Next slide. So I don't know how many of you are aware of the United Nations Sustainable Development Goals, but there they are, there's 17 of them. And the reason I put that in the pack is that until about 18 months ago, Unity had its own impact measures. They were bespoke to Unity, and we measured our performance against those measures. We felt we should change to a globally recognized impact measure, and that's why we've moved to the UN Sustainable Development Goals. And now we report on those and our impact against those goals every half year in our impact report, which if you want interested, you can find on the Unity Trust Bank website. Next slide, Chris, please. So to bring that to life a little bit, I say everything we do aligns with one or more of those goals. Some are more obvious than others. So the health and well-being, for example, we do a lot in the healthcare sector with care homes, with GP surgeries, dental practices, retail pharmacies. So everything we do must align with one or more of those. And that's the start point for us when it comes to assessing lending proposals. We want to make sure that what we are supporting is a business that itself drives impact within local communities and society more widely. Thanks, Chris. And just in terms of our headline lending criteria, and as ever with funding, it is all negotiable. But I say our start point is very definitely positive impact. We have to be able to demonstrate that both to communities. Because we are a relatively small bank, we are just not resourced to deal with high volumes of low value loans. So the floor for us, the loan funding has to be over £250,000. The other points on here are, I say, all negotiable, secure. Typically, we will take tangible security from borrowers. Pricing is very definitely negotiable, as are repayment terms in terms of the length of time over which loans are repaid. And the one thing we do make sure we are able to deliver is that of a dedicated relationship manager. Every one of our borrowing customers has a relationship manager, and they will look after that customer through the life of their time with Unity. So that's a little bit about Unity. I'll pass on to Kevin to tell you a little bit about Big Issue Invest. Thanks, Chris.
Hi, good morning. Well, good afternoon. I'm just going to talk a little bit about Big Issue Invest and give you a little bit of background about what we do, and also why we do the things that we do. I'll try and follow the slides as much as possible, and I'll try to keep the main points as simple as I can. Just in terms of context and background, Big Issue Invest is an organisation which is part of what's called Big Issue Group, which is essentially Big Issue, the magazine, which people will be familiar with, and also what's called Big Issue Foundation. So the origins of what we do start with the magazine. The magazine was set up about 30 years ago, and the idea of the magazine is to help people in crisis, to give them an opportunity to help themselves. So they buy the magazine from the company, and then they sell it to members of the public. So it's a social enterprise which operates with the dual purpose of creating a social mission, and also creating a sustainable trading organisation. When the magazine was initially set up, it had problems getting finance from mainstream banks. So at the time when it was set up, it wasn't able to go to a bank, and banks weren't geared up to lending to social enterprises. So they relied on philanthropic finance, which helped them set up. So they got funding from the founder of The Body Shop, Anita Roddick, and husband Gordon. And once it got up and running through this philanthropic capital, it was able to prove that you could run a social enterprise. So you could run an organisation which actually had a social mission at its heart, and you could also trade as an organisation. It's been doing that successfully for the last 30 years. But added to that, at the heart of the company is the idea that they want to help people that are in poverty and disadvantage. And so what they did was they set up a foundation, and the foundation helps people move along in their lives, and it helps people with things like getting a job, opening a bank account, moving into accommodation. So it sort of focuses on people's lives in a slightly different position to what the magazine does. And then Big Issue Invest was set up as a way of also helping people, but the focus of Big Issue Invest was on prevention, about preventing people falling into homelessness or into disadvantage. And the way the company was conceived was about helping social enterprises and charities access finance, which Big Issue itself wasn't able to do. So it started with the recognition that mainstream banks might not be able to provide financial support to charities and social enterprises. So Big Issue Invest was set up as a mechanism to help charities and social enterprises develop and grow, and against the backdrop of them being unable to access finance from mainstream banks. So we operate in the finance sector, but our sort of ethos and outlook is slightly different to mainstream banks. So we work quite closely with banks like Unity Trust Bank, and really what we're trying to do is help social enterprises and charities sort of overcome the challenges that they face in terms of attracting finance. In terms of the in terms of the company, Big Issue Investors has been going for about 15 years. We're a national organisation. We have a head office in London, in Finsbury Park, and then we have regional staff in different parts of the country. I'm based in Birmingham in the West Midlands, and we have colleagues in the North East and the South West. We're sort of a relatively small organisation with 22 employees, and we have a number of funds. If you could just go to the next slide. We have a range of funds from across like different stages of the life cycle of organizations. So our early stage program is called Corporate Social Venturing, which is for startup organizations, which is looking at helping early stage organizations access small amounts of capital. Usually averages out at about 50,000. Then we have Impact Loans England, which is funding from about 20,000 to 250. And then we have loans at about 250 to 3 million. We also have a number of pieces of work which are sort of more interacting with mainstream finance. So we have a retail bond with a big financial company called Threadneedle, and we also have what's called the Big Exchange, which is a platform for members of the public to buy shares with a social focus. So the work that Big Issue Invest does is quite broad in one sense, in that we provide finance directly to social enterprises and charities, but there's also this campaign and advocacy work around how mainstream finance engages with social issues and social causes. If we could just move on to the next slide. One of the questions that we're often asked about in terms of the loan finance is what does it actually look like in terms of size, terms, and some of the specifics. So just to give you an idea of one of the programs, Impact Loans England, we offer loans between 10 and 150,000 £. Interest rates tend to be between 6 and 8.5%. We charge arrangement fees, which average out at about 1%. The length of loans that we have tend to vary. So we generally don't structure loans as fixed in terms of format. We tend to work around what clients are looking for and what kind of problems they're experiencing in terms of their cash flows. Most of our loans are basically what's called unsecured. We don't charge early repayment penalties. So what we find with a lot of our clients is they want to borrow money, but if they're in a position to pay us back early, we don't feel that they should be penalised by having to pay a penalty. So we let people repay as and well they want to outside of their fixed payments. How people repay also depends on the loan request. So we tend to be quite flexible in terms of how people actually repay. So some people just go for standard repayment terms, which is each month they'll pay a set amount of interest and capital over a period of time. But we also have different ways where people can actually repay the capital, which is outside of those parameters. And a sort of a timeline for processing loans is about 4 to 6 weeks. That does depend on the information that we receive from applicants, but it's quite a quick process. And the speed of the process tends to be a reflection of what our clients are looking for. And the kind of financing situations clients find themselves in. And probably the other thing to point out about our process is that it's one person from start to finish. So the initial person you'll have a conversation with at the beginning is if you're successful and go through the whole process, that's the same person who will actually work with you at the when the loan's actually in place. And can we just have the next slide, please? Just to give you an idea of some of the kind of organizations and some of the types of funding that we do in terms of the practical charities. You can see on the slide, we've got one organization called Positive Support for You. That's an organization which works with people that need care and support at home. we've lent them various amounts of money. In fact, in total, we ended up lending them, I think, loan finance on 4 different occasions. And they required loan finance for different things. In the first phases, when they borrowed from us, they wanted money to cash flow a contract which they'd secured. So they needed money paying up front, and then they draw down the money from the contract. So we were able to give them a loan to finance that. They needed training and development cash, so they came to us for a loan to train their staff when government legislation had changed. And then they've needed money at different points for cash flow and just general cash flow cycle. So they're a good example of sort of customers that come back to us for different purposes. Escape Family Support, they're an organisation that came to us and wanted to purchase a building. We were able to lend them money to buy a building, and they were going to renovate the building and let it out. And Hey Girls is an interesting organisation. We lend them some money to develop their sort of campaign work around period poverty. So they're a relatively early stage organisation. We lend them money for working capital, and they've been able to grow over the last couple of years. So all our companies that we work with are actually charities and social enterprises. So the organisations that we do lend to tend to be asset locked. So we tend not to have a lot of companies which are profit with purpose. So legally, they tend to be companies with limited by guarantees, and we see more and more kicks that apply to us for funding. So that gives you an idea of the kind of organisations we work with. And I think that's the end of the slides for me.
Thanks, Kevin. Yes, it's back to me. So what are the basic needs in terms of presenting a case to any funder for loan finance? Well, in essence, you need to understand what you're trying to achieve as a business and as a management team. And build that into a plan. We will ask for a business plan from any customer coming to Unity who is seeking finance. We need to understand what their objectives are and how they plan to achieve those objectives. And often advice and guidance, not necessarily from the professional community, but it might be, but often seeking advice from somebody who's been through the process before is actually very useful and very helpful. So it could be another business who you're aware of that has been through that process more recently. And as bankers, and I categorize myself very much, I love.
Sorry, David, I've just lost you there for a second.
Can you hear me, Chris?
I can hear you now. Yeah, that's better.
Okay. Yes. So the numbers, both looking backwards in terms of financial information on the business as they have performed, and then forecast to see how they're going to perform moving forwards, and then sensitizing those numbers to make sure that that if something does go awry, then that is reflected in a scenario planning, a what if scenario for the business. Funding sources, it doesn't have to be all borrowed funds or all debt. There are other sources of grant funding, soft loans out in the marketplace, and it is certainly worth exploring those. And there are bodies out there that will help the search for those funds. And ultimately, whatever structure of funding you deploy within the business, a lot of that will undoubtedly need to be repaid over time. So the ability of the business to service that borrowing is essential, and to provide the funder with the certainty and the assurance that servicing is comfortable would be a great step forward in terms of being able to secure that loan funding for your business. Kevin, over to you for the pitfalls.
Kevin, are you still with us? Have we lost?
Yeah, sorry.
You can just keep your camera off if that helps the Wi-Fi.
Sorry, yeah, connection was really bad there. Can you hear me okay?
I can hear you now. Yeah, that's better.
Okay, sorry, I was just having trouble unmuting. So we've prepared some sort of common mistakes and really how to overcome them. And I guess these are not necessarily in any particular order of importance, but I guess what we tried to sort of get across is that essentially there's kind of almost no right or wrong way to actually go about approaching or thinking about sort of social investment or repayable finance. But I guess there's probably stages that organizations want to sort of think through, and also think through the kind of ways that you can actually get help. So I've been doing these kind of talks for about 7 years now, and actually over the last few years, the kind of levels of support and actually good support and advice that actually exists now is actually radically different to what it was even 2 or 3 years ago. So there's actually a lot more clarity in terms of what lenders do. There's a lot more clarity in terms of where you can actually find support. So people approaching finance now are in a much better position than what they were 5 or 6 years ago, where I think social investment was seen as really quite complicated. So I think just thinking through some of the main areas, I think the thing I would probably start off by saying is that Unity Trust Bank and Big Issue Invest are very different in terms of organizations, in terms of what you would approach us for. But underpinning what we do, there's very much commonality, and that commonality will be around that the social is going to be really important to us, to both organizations, and also the financial. What's very different about us is how we achieve the financial and what we're looking for in terms of what clients bring at different stages. And I think that's something to be really clear about. And I think that brings us into the first point, which is a lot of people are not really clear about what their objective is, and are not clear about their social impact. And that can be very basic things, like when I talked about the kind of organizations we work with, we tend to look at the organizations in terms of legal structure, and that can be important when you're approaching different social lenders. You know, people will have a preference for different types of legal structure, and understanding social impact is something that's really needs to be clear in terms of what the organizations, where their starting point is in terms of the legal structure and the organization, and also what they do in terms of measurement, and also articulating what the social impact is. But I think the initial starting point needs to be, when you speak to a social lender or you're looking for finance, you need to be clear about what your objective is. What do you actually want from them? And I think the key elements related to that is to have really good research, and to actually to look around, look at the resources that are available. So one of the best resources that's available at the moment is called Good Finance. It's a website which provides a list of providers of finance and also the providers of support. And having a look at something like Good Finance really gives you a sort of an understanding about, are you speaking to the right organization for what you're actually looking for. So if you're looking for an unsecured loan, you know, you'd be better talking to an organization like Big Issue Invest. If you're talking to Unity, they may be, you know, if you're looking for a mortgage, they'd be more suitable for a mortgage type of lending. And if you had security, again, they would be the right organization to speak to. So I think looking at doing a little bit of research, and thinking through what it is that you're doing, and looking at what kind of support is available, then that's really important. I think the other thing that comes up very early on when people are thinking about finance is that people are not necessarily prepared for questions. So people sometimes will speak to social lenders and not necessarily expect them to ask certain questions. And I think people generally can sometimes draw on the experience of applying for grants and also applying for investment. And I think that the two processes are very, very different. So what people are generally used to with grant funding is guidelines and organisations which are not too willing to engage. And one of the reasons for that is because lots of grant funders, they're inundated with requests for funding on a regular basis. So their processes have been set up to sort of put the emphasis on the applicants, whereas social investment is slightly different. And social investors will generally sort of like, they'll have more time to talk to applicants one-to-one. So they will go into things in a little bit more detail, and sometimes that catches people out. So sometimes people will ring up and say, well, I'd like to know how you apply for funding. And, you know, we would generally sort of like start asking questions, but sometimes it's people just want to know where the application form is. We generally don't use an application form and start by trying to understand, you know, is it really the right thing for people to do to start to sort of put information together for us. So that's one of the questions we would ask, which is, you know, what information do you already have? But generally people are sort of, you know, people just assume that then they're not going to get a response, when in fact actually social investors are quite keen, to sort of you know, engage and talk to people. I think in terms of actual applications, once people get into the actual presentation of information, I'd link the things together. So I think when people are sort of presenting particularly financial information, they tend to underestimate three things, and the three things that we've identified would be the key risks. So what are the risks involved in the proposal? Key person dependency, especially in smaller organizations, is really key. And then thinking through different scenarios. So these are three areas where when people are putting proposals together, they tend not to sort of, you know, they tend not to pay too much attention. And the key person scenario, key person dependency is really important, because within a lot of social enterprises, I mean, you know, that there's a lot of people that are really key to the organization. And in fact, that's one of the key things that makes them successful, which is the passion of the individuals, and particularly the founders. And I think from an assessment point of view, it's kind of, it's more about kind of understanding, you know, that's an advantage to the business, but also a risk. And I think, you know, that's something that people need to consider. And then risks, you know, they could be of many different sizes. But I think what lenders generally look for is, what are the key risks? What are the key risks around cash flow? So what's the key risk about lenders not getting their money repaid? So people generally will focus on wide risks, but really lenders are looking for risks around, well, you know, what's going to stop them from getting their money paid back. Another area where people sometimes kind of don't take advantage of what really is opportunity is match funding. Sometimes people approach social investment repayable finance as one thing or the other, but most social lenders are really keen to help organizations if they're applying for grant funding, if there's a mixed funding involved. That's something that, you know, social lenders are taking on board more and more. So you might, you know, if you're able to get 50% of what you're looking for from a grant funder, that's quite attractive to social lenders. And I think one of the things which is changing quite a bit is, I think social lenders will help you at different points in your fundraising proposal. So I think previously, when I sort of first used to look at proposals, a lot of the proposals used to come to us at the end where they'd already secured funding. But more and more we're working with organizations now where we're actually at the start of the journey, and we're saying, well, we'll actually be prepared to lend of a certain amount. If you can get grant funding from another source, then, you know, we'd go ahead with the proposal. So that's a slight change. Another thing that comes through, particularly like at the beginning of a process, is this idea about what are people trying to achieve. And we've summarized that by saying, don't hide bad news. and by that, I think sometimes within social investment, there's been an emphasis on organizations learning how to pitch, and organizations learning how to present things. But when you approach organizations like Unity Trust Bank and Big Issue Invest, you'll go through sort of a due diligence process, or go through a series of questions and information gathering. And what we're sort of really sort of interested in is knowing, you know, what the reality of the situation is, not just hearing, well, you know, your forecasts are achievable, but why are they achievable? So everybody who applies for, well, 95% of people that apply for a loan will say that they definitely feel that they're going to repay it. And if that was the case, everybody would receive financial support. But I think it's understanding things, and I think that's the mistake that people make. Sometimes people approach us and they're generally a little bit sort of not as open with the information as they could be, and they really need to sort of be prepared that, you know, they are going to be asked questions. And I think that's the final point on the slide, which is it's really about being prepared to answer questions, but not necessarily see the questions as an attack. So one of the areas where people find questions the most uncomfortable, and they can be a little bit disencouraged, is on the financials. So sometimes you can feel that people are asking questions, and people sort of feel, well, this is getting really, you know, they expected just a general sort of call, but then, you know, somebody's asking them lots of questions on the financials. But I think historically, where people have seen that as something that's a negative in terms of, you know, something that discourages them from applying, and probably from our experience, it's more understanding why are people asking the questions, not the ability to answer the questions immediately. So one of the programs which is available, which is a really good tool and a really good mechanism if you are looking for loan finance, is called the Reach Fund. And that's administered by the Social Investment Business. It's been developed by Access Foundation, and basically there's lots of social investors which are registered as what's called access points, and those access points work with applicants for investment, and if they feel that they've got the right makeup in terms of they're looking for a loan, and they're almost like, you know, they're in the right direction, the Reach Fund is a mechanism for sort of getting support. So you can use the money to get a consultant to come and help you and put the final touches of an application together. So resources like the Reach Fund are actually quite useful, and for organizations like Big Issue Invest, they've really helped us reach organizations that we wouldn't necessarily be able to engage with. So we've been able to work with organizations that actually don't have the capacity to engage with loan finance application processes, and you know, by having a consultant, somebody to help the organization, they've been able to sort of overcome those challenges. So I think, in summary, what I would say is, one is do some research. You know, look at what's available in terms of different types of lenders. Go on resources like Good Finance. Two, make use of programs like Reach Fund, and other funders have similar types of things. You know, talk to people about their experiences. I would also say that, which I think is going to happen more, and organizations like SE UK are doing more around this, is I would actually, you know, do what we do in normal life, which is, if you want a plumber, you're going to ask your mate, or you're going to ask somebody that knows somebody. And I think in social investment, you know, I think that's going to become more common, where if you know an organization that's worked with a lender, ask the lender, and, you know, ask the organization, you know, and say, what would they like to work with? What are they like in terms of timelines and things like that? And I think that's becoming more common. And then I guess the sort of the final point I'd probably make is not to see the process as necessarily full of hurdles, but to start by thinking, well, actually, social investors are out there to help people. You know, fundamentally, what drives the social investors is a social mission. Big Issue Invest is a social organization. We don't create profit for shareholders. We create profit for the foundation for the work that we do. Our charge is a reflection of the cost of capital to us. So we approach it in quite an open way. And I think, historically, I think people have been maybe a little bit suspicious of what social investors are doing. But I think if you recognize that social investors are there to help people, it's just understanding where they're coming from in terms of the processes that makes it a lot easier. Because it might be that you approach an investor and it's not quite the right time for you, but that doesn't mean that your idea is not a good idea, or that in the future the door's closed. It could be just that at that moment in time the organisation is not in a position to take on loan finance, and we find that all the time. So I think that's the sort of concluding remark from me, which is be open and see the process as being reasonably open as well.
Excellent. Thank you very much. Both of you. All right. We'll move on to some questions. I can see there's been a few things in the chat. Perfect. Yeah. Okay. So yeah, there's been a few questions coming in from the chat. I just want to say, first of all, that with the PowerPoint slides will be made available. We'll share those with the recording once this has been done. Any other questions, do get them in the Q&A box. Sorry, I'm just having a little flick through to make sure I've got the right question. Right, so there's a question coming in here about how you guys as lenders, and this I suppose is very relevant now considering the time we're in as we're building back from quite a major disruption, account for disruptions caused by COVID when assessing lending requests. So, the disruption caused by COVID, how has that impacted you? Maybe David, if you want to take that one.
Yeah, thanks, Chris. Yeah, it is a question that is raised regularly, as you would imagine right now. So I think the way Unity approaches it is trying to look for a business that's been trading for a while, look at the pre-COVID performance of the business. Every business, pretty much to a greater or lesser extent, has been impacted by COVID, some positively, a lot negatively. So we would look at the performance pre-COVID and then look at forecasts and assess the assumptions behind those forecasts. And do they look reasonable in the context of the business performance before COVID? It is very difficult to sift out support mechanisms from the government COVID initiatives, from financial performance. It's incredibly difficult to normalise the trading over the last 12, 18 months. So we have to look backwards at prior performance and look forward at forecast performance. And apply a degree of common sense in terms of whether we think that business is impacted long term by COVID, or whether it simply has been impacted over the last 18 months and it will get back to a normalized level of trading. Okay. But it is difficult, Chris, I accept.
Yeah. Kevin, do you want to add anything to that?
Yeah, I guess that's I'd give a very similar answer. I guess the only thing that we sort of like, I guess two things that stand out in terms of what we're looking at the moment. One is, what's the starting debt position for enterprises at the moment? So there's been a lot of lending through bounce back loans and coronavirus interruption loans. So that's one thing, looking at, well, what does, how have people got through the pandemic, and what does their sort of existing debt look like? And then the other issue which we're trying to think through is, what do repayment periods look like? So I think as David said, it's very difficult to predict what normality is going to look like. But I think what we're sort of looking at is, well, it might not be the case that people can just pick up payments in the same way that they did before the pandemic. So you might go to an interest-only period. Or you might have to do different things as you're going along. So it's looking at what the existing debt is, and also what kind of repayment periods people can take on, and what's best for them. But those are the two sort of main sort of trends that we've seen coming out since we've started to relend. During the pandemic, we tended to rely on other organisations. So CBILS loans and bounce back loans rather than directly lending ourselves.
Okay. Excellent, thank you. We've got a question here from Rav as well. We've just changed from a CIC to a CIO, but the trading activity has remained the same. When applying for social investment, would be able to use our CIC trading history, which has been going on for 7 years, as part of our application. Kevin, do you want to start with that one? Then we can move on to David if there's any additional comments.
Yeah, for us, that would be absolutely fine, yeah.
Perfect. Was it the same with Unity, David?
Yeah, it would be. Yeah. We very much look at the trading history as it stands, irrespective of the change in structure. Yeah, very much so.
Perfect. We've also got a question here about organisations working, I presume this is social impact outside the UK, so organisations with international impact. Would they be able to access these opportunities? If David, if you want to start on them.
Well, I think, to be honest, Chris, yeah, we are very much a UK domestic funder, and we are primarily looking at impact in the UK.
Yeah.
That doesn't mean to say that a number of the businesses that we fund don't have overseas activities and impact, therefore, overseas. So it wouldn't exclude any business from approaching Unity. But our principal objective is to see impact within the UK. That's probably something that that Unity would be looking at positively. Put it that way.
Okay. Is that the same with Big Issue Invest, Kevin? Or
yeah, it is. Yeah, we have. So we have generally we have a UK remit. In fact, some of our funds are England wide. But yeah, the international is not an area for us.
Okay. Got a question here from Emilio as well, and he's talking about funding as a startup. What's the best way to get funding as a startup social enterprise? Kevin, I think you mentioned the Big Issue Invest has a sort of option for startups.
Yeah, I think with startups, it's kind of one of the areas where it's with social investment, it's very difficult in terms of actually accessing it, because I think I'm not sure what the statistic is, but it's a very high rate of organizations that start up don't make it past the first year, and then the numbers that make it past the third year are very low. And I think the finance for social investors is tended not to sort of support startups. But for me, the best place to go for startup funding is organisations like Awards for All, if it's something that fits into their legal structure, or Unlimited. And then outside of those kind of things, there is specific programs that organisations run depending on where you are in the country, like School for Social Entrepreneurs. They run an actual program for people starting something up, and then there's some cash attached to that. We run a program, or we have run a program for startups called Corporate Social Venturing, and we've run that over the last 10 years, and it's gone through different iterations. And that was a program that was like, you got mentored by corporates from banks or big companies like Experian or Barclays, and then we had cash attached to it. But I think depending on how much people are looking for, I think small grant funding is reasonably quite accessible for startups. And then if they're up and running, then looking at loan finance a little bit further down the line.
Okay. Anything to add to that, David?
I would have to echo Kevin's sentiments, to be honest, Chris. Unity does not have a startup product, and because of the amount, as I said in the earlier presentation, the amount that we are looking to lend, a minimum of $250,000, that often isn't the sort of figure that the businesses in that end of the market are looking for. So I would agree with everything that Kevin has said. Yeah.
Excellent. And I thought, I'm sure we can also share the resources that Kevin mentioned there as well with you, Emilio, as well, so you have access to them. Okay, I think that's looking like everything for questions at the moment. Just checking the Q&A box to make sure I haven't missed any. Yeah, that is everything. Like I said, the slides will be shared. We'll share the links to Good Finance and the Reach Fund as well that Kevin mentioned. David and Kevin, this has been really insightful, really useful. Thank you so much for joining us here today. And
no, thank you, Chris, for the invitation and for everybody's attention. Thank you very much indeed.
Thank you very much. Yeah, likewise. Thanks for organising.
no problem at all. Thank you very much, everyone, for attending as well. Do check out the rest of our webinars on our website. We have a great series of webinars coming up as well. And I'm sure we're doing more with both Big Issue Invest and Unity Trust in the future as well. If you have any questions about SE UK, just email membership@, socialenterprise.org.uk. All right, guys, I'll let you get on. Thank you so much again for today, and hopefully see you soon. Bye-bye.
Thanks very much. Bye-bye.